Consider these points when choosing between a deposit bond and a bank guarantee. I'm Grant Bailey, Managing Director of Enable. I've been in the property industry, finance industry and deposit bond industry for over 25 years. When you're purchasing a property, there's other options to consider besides paying a cash deposit, and that includes a deposit bond and a bank guarantee. Depending on your individual circumstances, that will determine which option is best for you. A deposit bond enables a property purchaser to delay the payment of the cash deposit until the completion of the purchase when you take ownership of it. So your options are either to pay a cash deposit now with the balance of the purchase price payable at completion, or you pay a small fee for a deposit bond now and come up with a full purchase price at completion when you take ownership of the property. A bank guarantee is used as an alternative to a cash deposit to secure a property. To apply and have one approved, you have to apply to the bank and provide security to the bank by way of either a cash term deposit or security over a residential property. One of the great things about deposit bonds is that they're very quick to organise. Once you apply, it takes about 24 to 48 hours to get approved, and you then pay the fee and you're set to go. And one of the reasons why it's so quick to organise is you don't have to provide any security. Unlike a loan or a bank guarantee where you have to put up property security or cash security, with a deposit bond you don't have to provide any security. So it's very, very quick to organise. And once that's all approved, the fees payable these days is around about half the cost of borrowing the money. So it's very cost effective compared to alternative options of borrowing the money or potentially a bank guarantee. One of the advantages of a bank guarantee is that you have oftentimes the option to pay as you go. So the bank or financial institution issuing the bank guarantee will allow you to pay biannually for the bank guarantee. There is invariably an application fee you pay up front as well, but you have that advantage of being able to pay biannually as you go. When you're looking at a deposit bond or a bank guarantee, there's a number of things to consider. One of the great things about a deposit bond is you don't have to put up any security. Unlike a bank guarantee where you have to put up a term deposit or property as security, you don't have to do that with a deposit bond. And therefore you can keep your investments, whether it's you've got money in shares or you've got superannuation, you can keep those monies working for you. The application process is another great feature of a deposit bond. It's very simple. And because of that, it only takes a couple of days to get organised. A bank guarantee, on the other hand, is a full credit application, and legal documents have to be put in place as well. So the time it takes to get that organised can run into weeks, in which time you could miss out on securing a property you so dearly want. The other thing is to consider with a deposit bond is it's relatively cost effective. So that way you can secure your property very quickly with that quick application process and do it at a cost that's very cost effective.